All right. So basically, this is a comparison. If take this structure, let's talk about interest. For Westpac, 4,414, and ANZ 4,392. You can see the difference only $20. Yeah, it's less than $22. Repayment is slightly higher. Also, not high. It's also not much. Basically comparable, same, virtually same. The only difference is with ANZ you get $3,000 cashback. However, the cost is about $2,000 to $200. You have to pay discharge fee, government fee, because you have three properties to refinance. Yeah. So three properties. Sorry, here. 3 properties to refinance. You can say here. Okay, 3 properties to refinance. And the government charge is about $350 per property, and 357, I think, altogether. And the bank charge discharge fee as well. So about $350 per property discharge fee. ANZ, not ANZ, Westpac and the CBA. So basically $700 per property, government, bank. So times 3 is 2,100, close to 2,200. So if you factor this into it, the net money you get from cashback is about $800. $800. You can say $800 better than nothing. It covers about 2 years annual fee.
Yeah.
Yeah, so that's the only benefit you can get. Refund. In terms of interest rates, everything pretty much same. Pretty much same.
So what's the borrowing capacity with Westpac?
I did a
so
quick
do we have
calculation.
A loan serviceability?
Yes, I did a quick calculation, and also should be okay. Let me share that. Share this. But again, where's the share? Yeah. Where's this? Screen 1. Now, Westpac has been not as clear. The calculation, their calculator is not as clear as ANZ. The main reason is the way they consider your income. In the calculator, they don't distinguish clearly how to separate from casual and permanent. So they lump sum income. But when they assess, they have a more sophisticated way. So based on my calculation, using their servicing calculator provided to us, you have still have about $700 surplus. $700 surplus. That is the assumption is it's not a refinance. It's not a new refinance. It's rather than an internal refinance, which means no matter what we do with Westpac loan, your broker's commission will be kept. He will not lose his commission. So there's no clawback issue.
So like you mean the previous broker will continue
your previous broker will continue. He will continue to keep his $6,000 commission.
Yeah.
And I will suggest to into an internal refinance, because we have to change the loan anyway. We have to change the loan from variable rate to fixed. Yeah. So we'll do internal refinance, which means we will reset your loan to 30 years rather than continue with 29 some years, and then. But I will not receive upfront commission for this refinance because bank already paid a commission for this loan. So he will keep the commission. I will not get it paid, but that's okay for me. I will only pay for the upfront commission from the Brunswick and the new property. Yeah. And but moving forward, he will not receive the trail, and I will receive the trail commission.
Oh, okay. So once the interloan is done, then he stops with the trail commission.
Yeah, he will stop receive the trail commission. Yeah, that's fine. Yeah. So that's most those brokers don't care, because the broker hates clawback.
Sorry, come again?
The brokers hate clawback.
Yeah.
Clawback means that's the psychological thing. If you don't earn the money, you don't care. But if you already earn the money and take away, the people get hit, right? It's like losing money.
Yeah.
That's a different thing. And if you don't earn this money, you don't earn this money is not yours anyway, in the first place. But you've already earned the money and taken away, that's a different thing. So that's a separate issue, and we don't need to worry about that. And yeah, I just let you know how this if we do this loan, if we do this loan, and how the commission will work. Yeah. All right, so now it's up to you to decide how you want to. From my perspective, these two loans structures are pretty much same. Pretty much same. Only benefit for you to refinance is about $800. It basically can say, I'll save 2 years annual fee if you take this way. Yeah, 2 year package. Free package.
So is there any negotiation on the rates at all with either of the banks?
Yes, we can still subject to, but the bank doesn't negotiate fixed rate. Fixed rate is set. Yeah, and variable rate may or may not, because it's already very low already. Both on Westpac and from my experience dealing with them. For example, for ANZ, not much room, because most loans are fixed. Variable rate is interest only, and because bank doesn't like interest only loans. For Westpac, we may, but the Westpac problem we have Westpac is you are existing customer. The bank doesn't treat favorably to existing customers in terms of negotiation, because bank wants to get new business. Yeah. So if you are refinancing from ANZ to Westpac, we may get a slightly better rate, but I think that's the probably pretty much is as low as we can get. No, yeah. So it is the it's in terms of rate, it is. I can try, but if we can get some, it won't be much. It will be 0.05 to the maximum. Yeah. Yeah. But in our application, we will do negotiation anyway, because we need to give them a negotiation. We call pricing approval. Otherwise, they give you standard variable rate. Yeah. That's okay. But how much we can get, I don't think we can get much lower than that. Yeah, I'll try. Yeah, so that's two structure. In terms of documentation, or similar, because you are going to refinance CBA and then purchase anyway. So you still need to provide the majority of information, the documents. You still need, and also you still need to provide the loan statement for Westpac as well. So in terms of documentation, very similar. In terms of processing, yeah, but not much different. Yeah, because it's a refinance. Same, sort of same. Westpac also, because there's a refinancing from CBA as well. But the downside of refinancing is you have to change bank arrangement again. If you use offset account as salary credit, and then you have to change your company, your employers change their bank account details. The credit card, the credit card you have is with Westpac?
No, Coles, just Coles MasterCard.
Oh, okay. Now, if you should use Westpac or ANZ if you refinance.
Yeah,
they waive the annual fee,
yeah,
and also they give you reward points as well.
Yeah, sure, no problem. So the difference here between the Westpac and INZ again is if you fix the loan, Westpac doesn't have any offset, whereas INZ does have offset.
Yes, yeah, that's the difference. But
So
do you need an offset? That's another question.
Well, obviously, not sure how long the process will take in terms of securing the land and the build, So if the money is sitting there, it will offset, and obviously it'll add up to that added benefit of $800 of savings.
You mean for the new property?
Yeah.
From
the cashback from INZ.
Yeah.
So the 800 we're looking at saving by refinance.
2 years annual fee. The net savings 800. Yeah, that's a reason. Why the main difference is the main benefit is $800, 2 year. Now you don't look at $800. You're looking at a 2 year package fee.
Yeah.
So you basically get a 2 year free, and then after 2 years you can do something else. You never know.
Yeah, and obviously in 2 years' time, if like we offset by 200,000 or something like that, the fixed rate home loan unoccupied, how much savings we get from that?
No. For you to do you need offset account for investment loan or just for home loan?
No, the unoccupied.
Unoccupied. So which property will be unoccupied? It's still the new one in the end of the day, or the current one, Derrimut.
Well, that's not I'm sure about. At the moment, we'll just say Derrimut because they said we haven't really found or confirmed. Yes, yeah.
Yeah.
And in terms of the other question is in terms of refinancing. So if we refinance from the Brunswick loan, what's the LVR?
The LVR, it will be really depend on valuation. That's why I think we need to do valuation. Again, okay. On the valuation on front, Westpac will charge you because you are going to refinance CBA. They may charge you a valuation fee for CBA because you are existing customer. You're adding a loan basically. And for the new property, you also charge annual valuation fee. But ANZ valuation fees are all waived. No matter if it's 10 properties, they all waive everything. The LVR is depending on the valuation. At the moment, if based on the information in the estimation of all these 2-3 properties, the LVR is 80 point something, very, very close. It's slightly over 80%, but not that bad, not much. For example, security. No, LV, security is, no, we don't need to do that. We just simply do this. Okay, the total loan, we change the total loan. Total loan is 1.8. You know, why this is more than that? You know, this is not right. Why is 183?
Because you added a 720 there.
Yeah, it is 720 here. 720, the only difference is this. 16, yeah, from 85, it should from 81, 82, whatever. Okay, so you know, so 80.16 is a very small difference. So we can manage it. We can slightly reduce the loan if the valuation comes 2.7, 2.47. It is, you know, you can slightly reduce the loan amount if the valuation, any of these three property value is slightly higher than our estimation. Well, okay. So it really depends on the valuation. So that's why I would recommend to do a valuation first of all these three properties. The new properties is okay because the new property is 80%. Right? It is 900 over 720. So the only thing we don't know is the three properties, three existings, or these threes. Yeah. Oh no, or these threes. So
do you use like desktop valuation just to get a gauge and then choose a lender? Because obviously if you
because the valuation is based on lender. The bank, the valuation is not close. The bank or the valuation, we or the valuation on behalf of one particular, we can on behalf of the lender, and that if that valuation is only acceptable by the lender, even by the same company, valuation company, they still say this valuation is commissioned by ANZ or by Westbank. They won't use other people's valuation. You know, we order valuation for the bank, not for customer.
Yeah.
Yeah.
So how do we gauge about who to order the valuation through? Because if you order valuation through Westpac, we have to pay. Order valuation to ANZ, we don't have to pay.
No, you don't pay upfront, but you pay when you settle the loan.
Oh.
Yeah.
Okay.
Yeah. We order valuation free, but in the end of the day, whether they charge back to you, it depends when you loan settled. If you don't settle, they don't pay. You don't pay.
If you don't settle, you don't pay.
That's very strange. Say if you order 10 valuations, in the end, if you don't settle this loan, you don't pay. You only pay because the bank doesn't charge upfront.
Wow.
For example, for whatever reason, the loan doesn't proceed. If the loan is not approved or for whatever reason can't settle, okay, because they're not going to chase you for the $200. They're not. But if the loan is settled, they will charge you because they can charge you. They know chasing people $300 is something not worth. And also they don't charge upfront. If they charge upfront, becomes we charge upfront because we order valuation, and we don't want us to do that. Yeah,
it's interesting.
Yeah.
So if you go ahead and order valuation through ANZ, but you said ANZ doesn't charge till at the end at settlement as well.
Yeah. ANZ doesn't have any fee, including application, legal, valuation. They don't charge at all. But Westpac charge. Westpac only offer one property per customer. Free. I suppose they charge valuation fee when you settle these two loans previously. Now, if everything equal, ANZ is slightly better because you have 2 year, you get 2 year annual fee waived, saved, and also you have when you fix with offset account. It is true. Especially if you're looking at home loan front, yes. Yes. But why the interest rate in the end, Westpac is slightly higher than ANZ, even though all their fixed rate are lower, 2.69 versus 2.79, just because of this variable rate. With Westpac, you have to have a variable rate. Yeah, because you want to have offset account. It is true. It is true.
So if you asked, which one will be the investment, which one will be unoccupied. So for now, we say Derrimut is unoccupied. The new one will be investment. So once it's built and ready and we want to move across there, so would you be able to change from investment to unoccupied, or we have to?
You can. You have two choices. You can either change or not change.
Okay.
If you change, very easy. You just say you give them no. You can't change while the loan is fixed. Put this way, you can't change because the loan is fixed. You can only change after fixed rate loan expires.
Okay.
Yeah. So at the time, you just give them council rate notice to confirm the property address and your home address are the same. So they will say, okay, you have moved into this property, and then change this loan for unoccupied, and change the other property to investment. You can even do something I did before. You can say, okay, I moved into this loan property as a home, but I use the previous home as my second home.
Oh, okay.
People can have second home for whatever reason, for their relatives, for parents, whatever. It's not investment. I'm not living there, but it's my second home. So you can keep the same loan. You can do this as well. Sometimes you can get away from it, but there's no guarantee. But it depends. But I did once for my customer.
Yeah.
Because once loan is settled, they are not so serious. They change. It's not a reassessment. It's a totally different team, different mentality.
Yeah. But it has to be out of the fixed pair term. Sorry.
Yeah, you have out of the fixed rate term.
Yeah.
And also again, for the when you are building, you have to have a variable rate because you can't have fixed rate for building. Land is variable. You can fix, but building has to be variable for the building for the period of building, maybe 6 or 9 months. Yeah.
Yeah. All right.
Yeah.
No, I'm just thinking, if ANZ won't charge you valuation, even though
that's a cheaper. It is cheaper. ANZ, generally speaking, on that, it is only bank doesn't charge anything.
Yeah.
This is what they do. This is what they do. Yeah. Yeah.
So if we do valuation or order valuation via ANZ, all the valuations comes back. If you do not submit an application, they don't charge you.
They don't charge you. Yeah. All the banks don't charge.
Huh?
If you don't submit, they don't charge.
Okay.
Westpac doesn't charge you either. They only charge you when when you settle the loan and they have money to charge you. They don't ask you pay. They don't ask you pay, but they will charge you. Yeah. But so if you don't have money to charge you, they don't. You basically you don't pay.
But INZ still doesn't charge you at the end of.
Yeah. INZ doesn't have valuation fee. INZ doesn't have any valuation fee. Yeah. But Westpac do, but they don't charge you in the end. Not if a loan doesn't proceed, they can't. They won't.
So in terms of confirming the new borrowing capacity, so are we definite that we are able to service that, or we still have to do the valuation and then?
I think to do the valuation first. If the valuation, if the value is way below our estimate, it can be an issue because it suddenly becomes 84%. That is. The problem is, if we can't refinance Brunswick, it is not a good outcome for us, because if the loan stay with CBA, as I said last time, the bank treats the existing loan from other bank slightly differently from their loan. So they will harm your serviceability. Yeah. So I think the first thing is the valuation, no matter what. First thing we establish valuation, see whether we can refinance or not.
And what figures do they based on? Do they work according to the estimates we've provided them, or they work according to the market values, or?
Okay. First of all, we provide information, estimate my rate. LVR is 80% or 90%. Their system, there's a data modeling. They say, okay, if they have enough information in their database to establish this property's value, and also not too far away from what our estimation, they will just give you a valuation. It will take about a couple hours. The system to process it. If they don't have enough information to give a confident figure, they will say, okay, we will do two things. They can do a curbside. You send people, the valuation company will send people to drive through your property, have a look, and then they give you a curbside valuation, or they can make appointments and for inspection.
Oh, okay.
Yeah, there's three steps.
Yeah.
Not steps, three different options. But there's but the bank still reserve the right to do a full valuation in the end. It's no guarantee. If the bank, because that's the valuation company's decision, the bank has their own database as well. All right. If the upfront valuation, even though the valuation is commissioned from the bank to the valuation company, if the valuation say, they say, okay, the valuation reports data shows is discrepant from have a huge discrepancy between to their database, and then they will request for a full valuation as well. Yeah. Especially for apartments.
Okay.
But all your properties are not. They're not apartments. They are not apartments. So it is good. So yeah. So we sometimes we do have this kind of everything is fine, but sorry, we need to do a full valuation.
Yeah. No, Brunswick is apartment.
Apartment. It's how it's a high-rise apartment or just low rise. Low rise. Low rise, okay. If it's high rise, especially in the CBD in Melbourne,
Yeah.
Yeah. Yeah.
Yeah. So given that the valuation aspect is kind of safe with ANZ, no charge. What we might do is alter those figures there. So we might put Derrimut at like what 760 because I see the recent sales here in Derrimut.
Okay.
So
760.
Yeah.
Whoa, that's a very, very good. Yeah. I think the property Melbourne property market has started picking up now.
That's right.
Yeah.
And Brunswick, the last valuation I remember was 340.
Okay, 340. Yeah, apartments is always hard to say. Apartment. Yeah. But if it's that, it will be under 80%.
Yeah.
Yeah. Yeah. I think
that one should be all right at there.
Yeah. So we are very close. We're very close, and we're not overestimate our valuation.
And the 900 that you've put there, is it the total borrowing?
The total value, land and construction
value.
It depend on what. This is a property. This sheet is also property. All properties has nothing to do with loan.
Yeah. Okay, we can go probably ahead and order evaluation through ANZ and see what happens.
Okay. Yeah, that's first. I think that's the first thing we do. For the valuation, because we can't do valuation for this, right? Which is for valuation for these three.
Yeah.
I need a council rate notice or as well as the rental statement of these two. So I can, if they do request for inspection, I'll give them the agent's details for inspection.
Yeah, sure.
And then we wait for the valuation report. At the same time, we can, but at the same, because there's cash back, today is 25. We need to lodge application and submit the majority of documents to them by let's say Sunday, but I would say Friday. So we need to decide which bank we will proceed. That's the first thing.
When will the valuation be back?
Depends. It depends. If it's no, remember tomorrow is public holiday. Usually at least 24 hours.
Yeah.
If curbside, it will take longer because they need to organize people to drive around.
Yeah.
If a full valuation, that all depends on tenant.
Of course.
So time is not on our side, and put it this way, especially for ANZ. It's just for cashback. If no cashback, it doesn't matter, but it's for cashback. Yeah.
So can you put in an application before the valuation comes back?
Yeah, we can.
Yeah,
we can. Yeah, but you probably need to prepare to. The problem is if we can't get a valuation right, or if we can't reduce it to 80%, you may have issue when you buy new property, because in the end of the day, it's still same thing.
Yeah.
Yeah. So probably you have to but you need to prepare. If you need to be willing to prepare to reduce the loan amount a little bit.
Yeah.
Using your savings. So if it's okay, that's fine, because we're not talking about way over,
Yeah.
So we end up at 200,000. It's not possible. So we're talking about maybe 5,000, 6,000, or maximum 10,000. This kind of money.
Yeah, that's fine.
Yeah.
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 You're sleeping.
I think we can go ahead and order the valuation. In the meantime, we'll prepare the application for ANZ.
For ANZ, okay.
Yeah, I'll submit the documents today.
Okay, give me all these documents today. Give them to me and all the valuation first thing, and then I'll prepare application for ANZ.
Yeah.
And and I will try to lodge it by Friday. So because sometimes if in weekend, if they do out of sudden, because we're using our platform, as our software system, as well as bank's software system. If any software system, we can do some maintenance or whatever, well, out of auction. So if we lodgement everything we try to do, to get it done by Friday.
Yeah.
Because weekend is always, don't know, it's always a risk.
Yeah.
All right. So let's go back. So this is the structure where we want to go, or 1 year fixed, and other than for that one. Yeah. Okay. All right.
And then is there any certain conditions after refinance that you have to wait a certain period before you can sell a property?
No.
Because I'm planning to sell next week.
Sell? No. Okay. No, you can sell because of the variable rate. You can sell anytime. Yeah.
Okay. Sure.
Yeah, that's fine. You can sell anytime. Okay.
I'll send you the council's rate statement and the real estate one.
Rental statement first, then all the valuation.
Yeah.
So have you heard anything from the broker yet? No? Still no?
No, he's not. He won't reply anymore. I don't think so. I can't expect any reply because I told him I was escalating the matter to Blasa. So I've requested Blasa just for confirmation. Even the quotes were signed last year that the clawback commissions it started from 1st of January this year. So that quote will be still void. So I'm just waiting for that confirmation.
Yeah, I think the email clearly say that. Whatever agreement you signed, all the agreement you have is now void, which means they're talking about previous.
Yeah.
I think that's it. But you need to forward that to that broker. I understand for your sake, for your comfort, you say I advise you this agreement is void. If you don't reply to me for anything else, I'll consider you agree to it. That's it. If you later on, no, you are so whatever. I said, look, I tell you, if you don't reply to me, you agree to it. But you didn't reply to me. So even though so no matter what, you accepted it.
And the other thing is
by your action.
Yeah. And the other thing is he's clearly mentioned in his email that he's terminating his service to me. So he doesn't want to provide his service to me anymore. So that kind of terminates the quote anyway. Yeah,
that's strange. Why? But even you haven't refined, you haven't terminated, why he does that?
He's very business minded. He's looking after himself and his business.
But he's simply, I know he's looking after his money, but you need to look after his business, right? The business is people, a customer.
For him, business is money. So if he's losing money, he's losing business.
But no
not
business,
customers.
No customers, no money.
No. Caucasians, they think different, If money is rolling in, that's business. If money is not rolling in, there's no business. So if he loses his trail commission, that means he loses his business.
But there's no guarantee he will lose commission, though. You just raise the issue. It doesn't mean it will. Okay. Anyway. Anyway. Yeah. All right. Cool. All right.
Yeah. I'll submit.
Okay. Now I'll email you a confirmation. That's the structure we are going to proceed.
Yeah.
And also our valuation. So this is a structure, right? So double check. It's a 1 year fix, variable 1 year fix, and P&I interest only. But hang on. For the 720, you want to put for time being, you want to put a variable or fix. It doesn't matter for the bank. It doesn't matter for pre-approval. This is a pre-approval.
We'll say we'll put 568 fixed.
560.
Yeah.
What do you mean 560?
So that's the approximate land price. So as you said,
okay. 560 is the land price.
Yeah.
So 560, 1 year fix, and whatever left is
variable.
Variable. Okay, got it. Okay. Okay.
But we can change the figure afterward, isn't it?
Oh, yes. Yeah, we change the figure. Yeah, and for the pricing for the servicing, no difference.
Okay.
But just when I put the application in, it's better to have the right structure, so we don't need to change later on.
Yeah.
Okay.
All right. Sure.
Okay. Cool. All right. Done.
Thank you.
Okay. Thank you, Ronnie.
Yeah. Have a good day.
You too. Thank you.
Bye.
Okay. Bye.